Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of October 7th through 11th. Let's jump right into the markets. So the S&P 500 ETF, or ticker symbol SPY, has had a fairly good close last Friday. In particular, I personally liked how the price pinned at the highs at close, officially reclaiming my daily 10 SMA, which currently continues to curl up higher, which has also simultaneously allowed my daily 21 SMA to get in close proximity with the overall price action once more. So that means the short to midterm uptrend still lives on. However, there's a little caveat to that uptrend, and I'll tell you guys why in a few short minutes. So last Friday, obviously a great close, obviously a very nice candlestick, but this comes after a quote-unquote nasty rejection on Tuesday from all-time high resistance level of $574.50, which I highlighted in last week's technical analysis video. And this also brought in some very good selling volume as well. However, when we came to the very boring days of Wednesday and Thursday, the price continued to hold these lows that it formed on Tuesday, Wednesday, and Thursday. In fact, we got a very nice tight inside day candlestick on Thursday within Wednesday's highs and lows range. And so during these 2 days, we actually saw some very good under the hood buying, where we saw the market breadth staying relatively strong after Tuesday's quote-unquote disastrous day. And it also shows me that during that under the hood buying, that buying came in right on top of the previous all-time high resistance level sitting at $563.50. And you guys know how many times I have mentioned this level in August and in July. So it, to me, seems like buyers really want the price to stay away from this $563.50. So ideally, we continue to make higher highs and higher lows and eventually break over 574.50 this week. But here is that caveat. So currently, the market is very split between buyers and sellers, and bullish people and bearish people. And what I mean by that is, well, there's a lot of radical sentiment for the bull side and a lot of radical sentiment to the bear side. Now, don't get me wrong, I am not throwing away what I've said in the previous 2 weeks about a potential 3 to 5% pullback from our current all-time highs, or maybe in the near-term future, a new all-time high area. So with that in mind still, there is a good chance that Mr. Market here will try to take out all those radical sentiments on either side as we head into the most major catalyst that we have in the markets, which is the presidential election. And so it would actually be a little bit more realistic to think that the price can continue to move sideways. In fact, we have already begun doing that. As in the last, I would say the last 2 weeks, including last week here, we've essentially gotten nowhere, right? As the price continues to tighten up underneath this 574.50 all-time high resistance level. And so this explains what I've drawn here for you guys, this price path structure, as I can see the markets taking out both sides, where the price continues to move sideways in between these two major levels, the 574.50 current all-time high resistance level and the previous all-time high resistance level of $563.50. We need to keep it as simple as possible. So in this scenario, it will be pretty much realistic to think that the markets will just simply move sideways rather than having a very market volatile expansion where we see a nice run back down to that previous 555 support level that I mentioned, or even a revisit back down to September's lows. Okay, so again, I have not thrown away that possibility, but from a realistic standpoint, it would make sense for the markets to just simply move sideways and take out both buyers and sellers as we head into that major catalyst of the presidential elections. Now, for this week, there is a chance that we can still make a new all-time high price print. So all we need to do is retest this all-time high resistance level and have a nice peak over it and just simply break over our current all-time high price print of $574.71. Now, as long as the price continues to stay over the daily 10 SMA and eventually has the daily 21 SMA catching up the price fully and supporting the way up higher, we can still see a higher low and higher high uptrend, a very textbook uptrend that we have been seeing ever since we made that very quick pivot from September's lows. Okay, so that is a very ideal way to look at the markets this week. But then again, realistically, we can be seeing this sideways price action. But even with the markets moving sideways, we usually tend to see individual tickers doing their own thing. And so that segues us into our very first swing trade idea for this week. UPST, or Upstart Holdings Incorporated. And so, as you guys know, this notorious name is known for its very high short interest percentage and for its very wild and volatile moves. In fact, this name is usually looked at when the markets aren't really doing anything, because UPST, for some reason, moves when the markets are not moving as much. And so, with UPST, very recently here, as you guys can see on the daily time frame, we had a massive move up higher on its earnings report. And during its breakout here, specifically a breakout from its very massive and macro descending resistance trend line that spans from July of 2023 all the way up into August's lows of this year, the price has been able to continuously stay over this macro descending resistance trend line. So there is a significant change in the trend. However, if you take a look at UPST from a bigger picture perspective and you continue to scroll out, UPST has been stuck in a very wide range since May of 2022 all the way up into the current price action in October of 2024. So that is over 2 years of the price doing absolutely nothing. But that is the reason why this name is attractive to a lot of active traders, for us day and swing traders, because UPST can have those moments where we have those short squeezes that we want to take a part of. And so for UPST, if you continue to scroll out here, looks absolutely horrible, right? I mean, after this meteoric rise and obviously a complete move back down to the ground or to the earth here, the price has been absolutely smashed back down and continues to really not go anywhere, right? And so this is very typical of a company that has seen its bubble burst. So we have this peak, this rise and peak, and then obviously trough back to the downside. And we have seen UPST just basing and basing and basing for 2+ years without any type of a significant uptrend. And even if there's an uptrend, we've seen that completely smashed back down by overhead supply and some shorts who really hate this company. And so with UPST here, we now have yet another opportunity for us, because after this breakout from its earnings report, we are now making a very nice consolidation phase here where we're forming essentially a nice wedge. Now this is a pretty messy bull flag, I would say here. So I'm not going to call it a bull flag, just a simple wedge. And usually a wedge is a neutral chart pattern which could give us a breakout either to the upside or to the downside. But in this case, I want to bet on a possibility that we can see a breakout to the upside. Why? Well, first of all, again, we have a very short to mid-term trend reversal to the upside after its earnings report, and we have been continuously staying over the earnings gap up. And then we have seen my daily 50 SMA having a golden cross where the daily 50 SMA crosses over and upwards my daily 200 SMA here. And that is indicating to me that from a longer term perspective, we are still seeing some long-term buyers trying to support the price up higher when it sees a potential upside reversal. And so I really love how the price has been staying over the daily 50 SMA after reclaiming the daily 50 and the daily 200 SMAs. So in my opinion, with the daily 50 SMA curling up higher and really just trailing close behind the price, if we can rapidly move away and break out from this wedge chart pattern to the upside, we can see a longer term uptrend taking place for this name, and we can see the nasty rejections finally going away for this name. But then again, this name still has a pretty high short float percentage, okay, or short interest percentage rather. And so, I'm still going to be pretty skeptical on UPST trying to make a new long-term uptrend. So again, we're looking at this from a short to mid-term perspective due to the fact that it has so much overhead supply. And just, you guys can simply look at the higher time frames like the weekly or even the monthly. You can clearly see why UPST has such a hard time trying to find a long-term footing for an upside reversal for the longer term. So for us this week specifically, we want to see a breakout over this wedge chart pattern and over this horizontal resistance level sitting at 41.50, this whole number level of 41.50, which is the reason why our confirmation entry point for a breakout will be over 41.55. Now, for our profit targets, well, maybe just one single profit target, I am aiming for 44 bucks, giving us a pretty nice 1-to-3 risk to reward ratio. Now you guys might find that small, but you guys have to remember this is a very volatile name and it can face some very hard challenges to try to break over major levels of resistances, just like $44. In fact, we have seen the price rejecting pretty hard at this level back here and right here as well. And in fact, in this area, we found the price sitting over 44 bucks, but the overhead supply and the sellers that are sitting over this $44 level really pushed the price lower and wanted the buyers to not try to stay over this $44 resistance level. So in this case, a 1-to-3 risk to reward ratio is really not that bad when you take a look at this from a technical perspective and from this $44 resistance level. Now, ideally, we can be seeing a continued push over $44 here. But even if we do see a push over this $44 resistance level, we're going to need to get past all the sellers that are still present at these pivot high points right here and right over here. So ideally, if you do go past these pivot high points, we can be seeing $50 as the next ideal target and potentially 55 bucks. Okay, so now I really don't think this will happen, but 55 bucks can be a very good speculative price or profit target to have if and only if we see a sustained short squeeze to the upside like we saw back in July of 2023. So obviously we had the initial breakout in I would say late mid-May, and eventually we saw a very short-term momentum and micro bull flag that eventually led into that continued short squeeze to the upside. All right, so if we can't see a similar price action like that, which again I don't think is going to happen, then and only then can we see a retest of 55 bucks. All right, now last but not least, we have CART. All right, so CART, or Maple Bear Incorporated. Now, I'm not going to throw any shade to the people working at Maple Bear or the founders, but I'm really wondering why they called it Maple Bear for their, I guess, parent company, because everyone knows them by their main name, Instacart, right? So, you know, I wouldn't have named it Maple Bear, but, you know, no shade. No shade at all to them. Anyways, this is a very, very good looking chart for us this week and possibly into the next couple of weeks. And I'll explain why. So first of all, CART here, or Instacart, has been making a very, very nice bull flag, right? Or specifically a textbook bull pennant. Again, it doesn't really matter what name you guys want to use, they still mean the same thing, right? So this bull flag or bull pennant has formed after a massive breakout, again, which is also backed by volume here, and it has this volume bar is the biggest since this breakout over here. Okay, now this breakout was from its early IPO days, or what we like to call a price discovery phase, where the price makes a very ideal and textbook flat base after hitting a new low. Right, this comes right after its IPO. So after weeks of consolidation and during this price discovery phase, we had a massive breakout from this flat base, where again, this flat base ranged from $27.50 to $23. We saw weeks and weeks of higher highs and higher lows. Now, what really kind of confused me here was that, you know, it was a really good swing trade when we were involved in this breakout, and a lot of other members, well, you guys were involved in this as well. We did not see any news or catalysts as the reasons why Instacart was having such a nice rally to the upside. Now, obviously, we had our rumors that Instacart may be bought out, but again, there weren't any official catalysts or news to really confirm this breakout higher from this price discovery phase. And so ultimately, this meteoric rise for 1, 2, 3, 4, 5 consecutive weeks eventually led up to this peak that formed, and ultimately all those gains were lost. I would say at least over 75%. But after this pullback, the price continued to act in a very textbook manner, and in this case, it continued to consolidate right in between the whole number level of $30 and the whole number level of $36.50, or if you guys want to be more specific, $36.60. All right, and so during this consolidation, we formed a rounding bottom chart pattern, or a double bottom chart pattern, with the first bottom right here and then the second bottom right over here. Now again, doesn't matter what you guys want to choose to say, rounding bottom or double bottom, they both mean the same thing. They're both bullish chart patterns. So we have two converging bullish chart patterns. And so ultimately, this massive base has allowed a huge breakout that we saw very recently, about 3 weeks ago. And this breakout ultimately allowed the price to come right back underneath the current all-time high area or all-time high level of $42.50. Now, again, the all-time high price print for CART was during its IPO week, sitting at $42.95. So there is a good chance that we can see a revisit of this all-time high price print, or possibly a new all-time high price print if we see a breakout from this very nice looking bull pennant or bull flag. Now, in particular, I really like how we have very tight inside weekly candlesticks back to back, last week and last week. Now, the main reason why I think that we can be seeing this name for the next couple of weeks is that there is a chance and possibility that we can see another inside weekly candlestick as the price continues to move sideways and within the parameters set up by this descending resistance trend line and this ascending support trend line. And so again, I do not want to take an early entry point in between these two trend lines, because again, we can still be shaken out or faked out if the price decides to peak over this descending resistance trend line, giving us a fake impression that the price wants to break out of this very nice bull pennant or bull flag. So again, we need to see and wait patiently to see if we can't see another leg up higher backed up by very good buying volume. So again, I really want to see some very good buying volume, just like what we saw back in the week of September 16th. All right, now if you go on the daily time frame now, our preferable breakout entry point will be over $41, because at that point, okay, we'll be out of this descending resistance trend line for sure, right? That'll be a very confirmed breakout over this descending resistance trend line. And plus, these two trend lines are about to converge. So if you are to see another week, so this week of consolidation where we have a very, very tight inside weekly candlestick like I just described to you on the weekly time frame, we can allow this entire bull pennant or bull flag to completely form before we see a nice move up higher and out from this bull pennant or bull flag. And as far as the profit targets, I want to see obviously a retest of this 42.50 or specifically 42.55 all-time high resistance level, and ideally a retest of the current all-time high price print of $42.95. So again, the only reason why I really like this chart pattern for a swing trade idea for this week or potentially for next week or maybe next couple of weeks is that we had this very, very nice high and tight bull pennant or bull flag forming on the weekly and on the daily time frames. So again, ideally, I really want to see another inside weekly candlestick giving us 3 consecutive back-to-back weekly candlesticks, which will also allow the weekly 10 SMA to catch up and the weekly 21 SMA to continue to curl up higher to try to catch up to the weekly price action or the weekly candlesticks. All right. So with that, that is it for this week's technical analysis video. If you guys liked what you guys heard in this video, make sure you guys smash that like button down below. And if you guys are new, welcome. Make sure you guys hit that subscribe button. And on top of that, hit that notification bell so that you guys know when I am live on Tuesdays and Thursdays of every single trading week and when I have uploaded a new video just like this one. Thank you so much for watching and good luck tomorrow.